Hey everybody, my name's Egan. I'm from Galileo, who is sponsoring the FinTech track at Silicon Slopes. We're super excited to be sponsoring because of all of the exciting things that are happening in FinTech in the state of Utah. But today we're especially excited to have two speakers from outside of our Utah FinTech ecosystem coming to speak to us. The first is Dan Carroll from Wealthfront. He's the co-founder and chief strategy officer, that's right. And he's going to talk about why 50 million banks are going, or why 50 million people, excuse me, are going to leave their banks. And then after that, we'll hear from Lara Speakerman. So we'll go ahead and start there.
Thanks. Hello, everyone. Today, I'm going to talk about why 50 million people are going to leave their banks over the next decade. But first, I wanted to talk about a once iconic brand that we all knew and loved. And that brand is Blockbuster Video. Show of hands, who remembers Blockbuster Video? For those hands that aren't up, let me refresh your memory. Blockbuster Video was once the dominant entertainment viewing brand in the United States. If you needed a movie on a Friday night, there was one place you went. Blockbuster Video. There was this excitement of all the movies in the world being there. And this excitement also of not knowing if your movie was going to be there when you arrived. I remember flashback 1993. I'm 12 years old. I convinced my dad to allow me to rent an R-rated movie, A Bronx Tale. So we go over to Blockbuster Video, and we go in front, and the new releases, if you remember, are always in back, so you're running to go to the new releases. And always had the picture of the movie in front and then like the video in back. And I run up and it wasn't there. And I did what all people did back then. There weren't any Rotten Tomatoes, any recommendation. You asked a fellow that worked there, what do you recommend? Ended up with Mrs. Doubtfire with Robin Williams. Not quite the same. And then this company came around. Netflix replaced that excitement of not knowing what movie you were going to get to having the convenience of knowing exactly the movie you were going to get and when it was going to arrive. 2007, Netflix launched streaming. 2008, Blockbuster launched their competitive product. Their CEO went on CNBC, declared mission accomplished, and said, Netflix isn't even our competition. Fast forward 5 years later, Blockbuster Video announced they were shutting down 9,000 video branches and we're shutting down the company. Technology comes at you fast. Banks are having their Blockbuster moment right now. There's 75,000 bank branches out there. Now that would be a great thing if the growth driver for the banks going forward were baby boomers. They're used to meeting in person, printing stuff out, shaking hands. Millennials, on the other hand, the 90 million millennials out there, they don't want their parents' stodgy bank. This network of bank branches that was once a competitive advantage is now an existential threat. Bank branches were created by baby boomers for baby boomers. And when asked Wealthfront clients, 30% of Wealthfront clients haven't been to a bank branch in over a year. Yet the sad thing is bank branches are a tax on the American consumer. Bank branches cost the American consumer $200 per year per branch. Now, how did I come up with this number? The math is pretty easy. Let's take Wells Fargo, for example. They have 8,000 bank branches out there. Each one costs $200,000 to $400,000 a year to maintain, and each bank branch services the national average around 1,500 clients. Comes out to $200 per year per bank branch. That's more than an annual subscription to Amazon Prime, Apple Music, Hulu, Spotify, HBO, Disney Plus. Which one gives you a little more enjoyment, this side or this bank branch that you rarely ever go to. J.D. Power did a study that found 33% of big bank customers never even visit a branch. They're fully digital. So 50 million people out there are paying $200 a year for a bank branch they never use. I'm sure those same 50 million people would rather have a higher interest rate in their checking and savings. I'm sure those same 50 million people would rather not be charged overdraft fees. And I'm sure those same 50 million people would rather not have high fees in their investment management accounts. But you might take a look at that and say, well, Dan, isn't this a sign that the banks are actually modernizing? Isn't this a good thing? Not so fast. It turns out that fully digital bank customers are actually more dissatisfied with their banks. How could that be? The simple fact is bank apps are just ATMs on your phone. Very limited functionality. They don't connect to all your finances. They don't know your goals, hopes, and dreams. They don't give you advice. You can't buy online, so to speak. It's not in a bank's DNA to build great product experiences. Just like it wasn't in Blockbuster Video's DNA to build great product experience to compete with Netflix. Now, what is in a bank's DNA? Well, to try to figure out how to charge you more fees. When asked on a conference call recently the impact of falling interest rates on profitability, Jamie Dimon, CEO of Chase, said, "We will just raise fees." Let me repeat, we will raise fees. That's the type of anti-customer behavior that makes some of these companies the most hated brands in the world. And this isn't 1990s cord cutting where the hated cable companies and there's no solutions. We're entering the golden age of banking, one the industry has never seen before. And that's why 50 million people will leave their bank for a next-gen banking service like Wealthfront over the next decade. Now, the incumbents must have some view of the future. They must have some plan for the future of financial services. The incumbents think the future is chatbots. This is what happens when you get a bunch of old white males in a room. They come up with female assistants like this is 1950s Mad Men. Yuck. The truth is no one wants a chatbot. It's just replacing waiting in a branch for waiting on something as generic text message is something as important as your financial. Technology is way beyond this. But look, I don't judge the banks for having a misguided view of the future as they're just listening to their largest clients. And when you look at the demographics, you find baby boomers have over $20 trillion in assets compared to just $2 trillion for millennials. That $20 trillion is pretty attractive, isn't it? That's why you see banks continue to add bank branches. That's what an older audience wants. Now, when you look at millennial wealth growth over the next decade plus, you find millennial wealth is expected to grow by over 500% compared to just 40% of baby boomers. It's where all the growth is. And as Hall of Fame hockey player Wayne Gretzky liked to say, you skate to where the puck's going to be, not where the puck is. And that's where Wealthfront wants to be. Now, if you're busy building a business school 101 graph of what millennials want, it would look something like this. You have great experience, poor experience on the y-axis. You have convenient, inconvenient on the x-axis. Not surprisingly, millennials want a great experience that's convenient in their everyday lives. The problem is, most of the incumbent banks, they're over here. How many times are you trying to transact online in your bank, you get a pop-up, please set up a consultation and call this number. Consultation? Who even uses that word? No one wants a consultation. So we know they're inconvenient. And we know their apps are just ATMs on your phone. So we wanted to build an experience that's available at your fingertips, and that's what we've built at Wealthfront. And Wealthfront currently manages $23 billion in client assets and grew well over 100% last year. We're the largest next-gen banking service in the United States. And we believe the future of banking is based on three things. One, data. Gone are the days of going to your local branch, sitting down with Johnny, giving him your financial information, who transfers you to Sally, who then sells you the options at the bank. Sally transfers you to Billy, who tells you about the investment options at the bank, who transfers you to Johnny, who says the insurance options at the bank. Technology is way beyond this. At Wealthfront, you connect all of your financial accounts to Wealthfront. You know your net worth today, where your net worth is going to be projected at retirement. We know how much you're saving and spending every month, whether the trend is up or down. We know when you want to retire, the lifestyle you want to live, and the age you want to retire. We know how many kids you have, whether you're sending them to college, private or public, and how much you plan on paying for. All this is available right now. The future of the bank branch is this phone. And once you have access to all this data, you can use artificial intelligence to actually deliver advice that actually helps clients walk towards their dreams. How many times have you gotten an email from your bank telling you it's a great time to buy a home when you just bought a home? Told you it's a great time to refinance your mortgage when you just refinanced your mortgage. It's a great time to invest in your IRA when you just reach the limits and just invest in your IRA. Banks are marketing to the yesterday you. Wealthfront helps where you're going in the future. As you see, this client right here wanted to save more money and save an additional $400 per month. And we're recommending this client save an additional $400 per month in a Vanguard IRA, an account that we make no money off of. You might say, well, why are you doing that? It's simple, because it's the right thing to do. If you do well by clients and help them walk towards their dreams, they'll do more business with you. And once you're able to provide artificial intelligence and deliver that advice, you need to be able to take the order. One swipe, one click. If it still takes you over a minute to open an account in 2020, you're doing it wrong. If you have to print something out, notary, wet signature, you're doing it wrong. Data advice and one-click commerce all provide the bedrock for financial nirvana. One where your entire financial life is automated and optimized for you, or what some have dubbed self-driving money. Wealthfront's goal is to automate financial decision-making end-to-end, or what some have dubbed self-driving money. Your paycheck is deposited into Wealthfront, and based on your goals and lifestyle, we automatically route the money. Your bills are automatically paid. We automatically top off your emergency fund. We make sure you invest the right amount in each of your retirement accounts. And we invest the rest in a tax-efficient manner. And what's great, this isn't some pipe dream. We've been building the infrastructure for self-driving money for 3 years now, and we couldn't be more excited to bring it to you. Now, what's the impact of self-driving money on the industry and on society? Well, one, less marriage counseling. Money is the #1 cited problem in relationships. Imagine a world where money is empowering, not disempowering. Where money helps you reach your dreams, not squash your dreams. That's why we believe Wealthfront self-driving money will ultimately become the largest wealth creation engine modern society has ever seen. I know, it sounds crazy. But imagine the impact of the $8 trillion sitting in commercial banks earning no money, now earning 1.78% on Wealthfront. Trillions. Imagine the impact of all the money sitting at banks and emergency funds over the amount a client should hold that's invested over the long period of time in the stock market. Imagine that impact. Trillions. And imagine the impact on people's lives of actually not having to worry about money. Today already, Wealthfront clients tell us that we save them on average 100 hours per year. And that's before we supercharge their financial lives with self-driving money. This future is only possible through optimization and automation. This future is only possible through self-driving money. The future of banking is self-driving money, and we couldn't be more excited to be bringing that to you at Wealthfront today. Thank you.
Thanks so much, Dan. That was awesome. And just because I forgot to read his bio beforehand, I'm going to go ahead and read it right now so that we know who we just heard from. Dan Carroll is the co-founder and chief strategy officer at Wealthfront, which we heard all about, a next-gen banking service that helps young professionals manage and optimize their savings. The company grew by over 100% last year and now oversees more than $23 billion for its clients. Let's give one more round of applause to Dan.